Good morning, guys. Welcome to this Tuesday, April 14th. One more day. April 15th, we get the tax day. Final opportunity to pay your taxes, and all the automatic deductions are going to kick in and whatnot. Anyway, tax day. So we just got the city earnings. I think that was that pop you saw in the chart. The big beat on the earnings on that one. Both Goldman and Citi has reported, and both have been pretty good. Beating revenue, a lot of stuff going on in the economies, which is on the positive side. So all this gloom and doom we have been seeing the last couple of first months here of the year has been knocked down, drag out, kind of boring. So it hasn't quite made sense given what we got going. Now the sell off for when the rain situation kicked in, that's understandable. That's a market reaction, but the all the selling and rotation and stuff has been like, yeah, well, market economy is not doing that bad. And then now you can see earnings come out for the first quarter, and it's not bad, at least not for now. We still have big tech and all those guys coming out after that, and that's going to be also very interesting to see what happens. We get news this morning. We had that small business optimism index came in a bit weaker than expected. At 8:30, we get a PPI number, and that's about it. So that's about it for news. So that PPI number could probably going to be harder than expected. I would expect a market reaction. We'll see if it starts shrugging that stuff off. You saw that CPI read we got Friday that was shrugged off based on basically the market looking past it. Like, yeah, well, yeah, we understand that it's going to be a small increase in CPI based on the energy prices, but that's going to be temporary as well. And going forward, as that whole thing gets resolved, we're going to have a much more stable energy situation. Not that I don't think we don't have any more really crazy rogue actors. We have Russia, of course, which exports oil, but they don't use oil as a weapon. At least haven't now, but they absolutely need it. So we are starting off looking a little bit more positive. Yesterday we had a pretty spectacular pop at the end, and I that was on the wrong side of that one yesterday for sure. Started off range bound yesterday. We were concerned about the short side given the talks failing. Market completely surprised us and started grinding higher, and then got momentum. And at the end, you can see how they took out these areas, the 68.80s and 68.90s. Surprising that they had that strong of a move into the close. They just absolutely popped this into the close, and overnight has been to the upside. And we're heading higher. We're almost up to the all-time highs here. Can you believe that? So this whole sell-off we had based on the Iranian situation and the war and all the uncertainty, that I'm going to fold this back together like this now. You can see how this whole distribution has been on the downside. And right finally we have a move out of the middle to the upside. I'm going to split this guy out like that. Here you really have we had a little bit of starting point the other day, but here we really started. First move to the upside, second leg higher today, and we are on our way. We just turned this whole thing around. So the ceasefire caused this first little rally to the upside. That obviously is quite not happening. I'm not thinking that even if they start shooting again, there's going to be a sell-off. I think these guys are looking past it now. It's done. It's just a matter of how it ends and how fast oil prices come down. And markets say, okay, we're just moving on. And so we are right back up here again. We have taken out this area now, this ledge at the 69.30s. We're trading above it, and that's a pretty freaking good sign. So I would just stay on the long side right now, at least to get started. Look to buy weakness at 69.30, 69.20s, rotations up. If they start retracing these single prints, that could be your short trade in the morning. If they start knocking that down, retracing to retest these lows or these lower areas at 6900, 6890, 6880, these three support areas. So if they run it down here to test those, I would look to buy against them. If they trade down below that 68.80, bets are off, and the whole thing got reversed on us. That could certainly happen. You never know when you get a headline which is going to be knocking the socks off. But it definitely the kind of stuff we are going through is stuff which can certainly happen like that. You get a bad scenario come out of that Iranian situation, or something goes starts blowing up there. Market could certainly take a dump again. It just depends on what it is. If it's what we already know and the trajectory of that and bumps on that road, I don't think so. But if it's something new which happens, new player steps in or something like that, you never know what the curve ball is going to be. But and the market just going to react to. Initially, though, we are assuming right now we're not getting any curveballs right from the get-go. So starting off to buy weakness, 69.30, 69.20 early on. If they start taking out the 20s, look for a potential retracement trade down here to test these lows, and let's see how and then look to buy against these lower areas. We're going to change our bias if they take out that 68.80. That's our confirmation that we are heading lower and we are on the wrong side of it. If you want to be kind of aggressive, you can take off the long bias below 6,900. I'm not though. I'm gonna still look to buy against this. I'm not fully understanding the whole pop to the upside, if it's just earnings or if there's maybe something more, or if it's just the market shrugging it off. But we'll see. We're gonna trade what we see. And right now the market is making some interesting gains in light of all this concern out there. Right? And then that happens, you kind of have to pay attention to it. Because once the concerns disappear, and we have a ceasefire, we have a peace deal, everything is done, then you want to be in the market, right? You have to be on the sidelines when that happens, because then you're buying a high, you're chasing the market. And Nasdaq also popping pretty darn good. And I didn't say anything about the short side, but I'm not going to be that aggressive on the short side to get started, given what's going on. I'm just going to look for potential buying opportunities. So I'm not very aggressive on the short side at all, given what's going on. So on the Nasdaq, same story there. We have a pretty good pop. I'm going to on this guy. I'm going to fold this back together again, split this one out, fold that back together, and here you have a nice distribution now from this low sell-off, Iran war, whatnot. This is from the 17th. So you have this split, and the war started in the 28th. So there's a bit of stuff going on in here from the war as well. Here's your ceasefire, pops, next leg up yesterday. And then was yesterday's move. We have taken out this area now, the 450, 460s. We are right up here to this attractor area now at the 690s. So we are in a pretty good spot right now to take this higher, but we are at an attractor on the Nasdaq. Big attractor area, high volume area. You're already there, so you've already bounced off it if you're going to bounce. So that trade is over. So I would look to buy weakness against that 620s, 590s, 550s. They start trading below the 50s, looking for a potential retracement trade. Still looking to buy against the 450s and the 390 to 400s here for rotations back up again. The 400s down here, where is that? That is going to be, this is going to be this level, this edge. So if they start taking out this whole edge again, start trading below it, then we are back below this area again, and we're going to be heading lower. So at that point, we're definitely shifting our bias to the short side and see how far they can take it. But this could very well be that, the day session kicks in and you have this big retracement happens on both the ES and the Nasdaq at the same time, and they'll start retracing it. And if they take out that support area down the 25, 550s, start looking for that retracement trade. On the ES, that's the 69.20s. And that could be, it could probe down into the area, it could probe all the way down, you just never know. But once they start, there is a definitely good opportunity there for them to kind of push it. Just don't know how far they're going to go with it. So you kind of want to be early, but not just too early. Don't get caught in a stop run below the obvious. So it is that is the hardest part of that kind of a trade, right? They start probing down. It looks great. You try to get short aggressively, and they just reverse right back in your face and then stop you out and then retrace more than you want to sit in the trade. So you want to wait for that probe to the downside, a pullback, and then if you want to get short on the pullback or wait until it starts trading lower again, that's up to you. But somewhere in that vicinity is where you want to try your short, as good trade location as you can get, and then see if they can take it lower. But that would be that short trade I would look for. On the way higher here, we haven't been up here for a bit now, so I'm not going to be leaning against these resistance areas too much. I'm going to assume that I'm going to leave them there so that we know what they were before. Then we'll see what the market is going to do, right? But short setups on the way up is definitely a trade. I'm just not going to be very aggressive on it. I'm going to wait for the day session to stall. You see when they start running out of gas, and primarily not necessarily use the level too much. And then you have this upper level at the 750s, 830s. You have the volume edges are probably the better ones to lean against. So you have a volume edge up here at the 69, 65s. You have the mode here at 69, 60s. So you have a volume edge. So I would key in on those for anything, and be a little bit not as aggressive on the short side as you would be in a range bound market. Now, the kind of stuff you're looking for, the better way to look for short is really on the day session. Just look for the first and second standard deviation, the top lines here, and look for those and see how they as they develop. When they come back up and retest those highs, that's when you want to look for potential shorts. And you're looking for scalps, rotations back to the mean at that point. So I would look for bigger trade. I would look for to the long side and buying weakness. On the short side, I would look for more for scalping trades, like a retest, like the short-term retest, or a little pullback, that kind of thing. Not necessarily looking for big trades on those, but since the momentum seems very much on the long side. And I'm gonna change the background color on this one after we're done and see if I can get it to this gray color. I kind of like that. Kind of dampens the screen a little bit as well. So finally, on the bond market is you can see bond market is pretty much range bound, but they're heading up here towards that 115 again. So in the bigger picture on the bond market, here's your capital flow, just a big blob. So they're trading between that 113 and the 119 areas. We have an attractor here at the 115.15. That's kind of where they're heading now, it seems like. So prices coming up a little bit, yields coming down. It feels very much like they are discounting this whole Iranian situation, looking past it right now, which is surprising because they're not quite done. There's a lot of things can happen still. So, but the market seems to be looking past it, and the first two big hits or big items was the earnings report from Goldman and from Citibank, starting us off from a good spot. The ceasefire started things off last week, but as you can tell, that ceasefire may not hold at all. But it started a discussion, and I guess the market is looking at that whole process, maybe realizing now that there is a negotiation going on, even if they can't see all the little stuff behind it. And it's public and it's ugly and it's just and you can see people's hairs on fire trying to figure out what the negotiation is and trying to second guess everything. But I just had to take a step back and let these guys do what they're doing. Anyway, they sort that out. Iranian situation is going to be done, and we're going to find ourselves with a lot less risk premium on oil going forward. That's going to be good for the markets, good for energy. The question is just how fast that happens. So overall, the outlook is pretty freaking good. If the earnings season stays as it is, we'll be in pretty awesome shape in a few months here. Now looking at the cryptos. So this is the background on the chart. I'm going to shift it to here in a bit. See how that looks. Now on the cryptos, I traded up a little bit on silver yesterday. It wasn't great. I forgot it's 280 per side. 280 per side is the commission for that one. So it's like it's a little bit over $5 a round turn. So you have to make a little bit more on the trade. On on oil, it's like 80 cents, I believe. I think it's 80 cents per side. Let me check something real quick. So on oil, it's about 80 cents a side, and that's all in. So that's it's about $1.60 per round turn for oil, and the crypto's a little bit lower. So it's a percentage of the contract value you get charged in commission. So, but you had to be mindful because I blew a bunch of money on commissions yesterday. I forgot about that. Traded it a little bit too aggressively. But anyway, so it's lighter. You can see it's just 1,000 contracts traded here on the big size there. Overall, it's a little bit more than that, but it's not by any means in the scale as the regular CME silver, but it'll be getting there. It'll be getting there. So, but that's a crypto. So I'm still working on it. Still working on those. And it's available though. 861 is released. So if you have a Coinbase account, you can try hooking it up. It's a separate connection. I forgot to say it's a completely separate connection. So you're really trading. You have one of these little blue ones, right? Blue. You see that one? Top left here on the screen, and we have one for your CQD connection, and you have a second one for Coinbase. So you have two of them, right? So that's why it's a separate connection altogether at the same time, separate data server, separate everything. That's why the software is a little bit more complicated to get that going. So you connect a separate Coinbase account, you connect a different futures trading account if you have it, and that's kind of what you do, right? So you're doing it both at the same time. And I'm trying to figure out a good way to trade the cryptos because it's the only caveat really I'm seeing with it right now is the commission and the size of the contract versus the commission size gives you a little bit of a you have to get on bigger. You can't just scalp for a few ticks here and there. The commission is going to just eat that up and then some. So you need a little bit bigger trades. I'm trying to find opportunities for that or setups for that. All right, but anyway, so on the ES and Nasdaq starting off on the long side now, we know the potential short trade to look for, the single print retracement. Not going to be very aggressive on the short side to get started. Let's see how this develops, but that's kind of how we get started this morning. And we get about 8:30 in about 7 minutes. We get the PPI number. It's going to be the only news we get for today. Alrighty, guys, we leave it there. Good trading, and I'll see you back at 11:30 for the next update. Later.